Hi everyone, this is Harpreet from Harpreet Basan channel. Today I'm connected with Ms. Brij Bala, who has been working in the investments sector for more than 18 years and is managing 5 CR in stocks, mainly futures and options, as we speak. At such times when we see so much uncertainty, I thought it would be best to bring the viewers some thoughts from an industry expert. We'll be talking about personal finance planning today. Hello, ma'am. How are you?
Hello, Harpreet. Nice to connect with you after so long, actually. I'm well.
Yes.
Hello,
Well,
viewers.
yeah, and it's really great to talk to you as well. And I'm glad that you could find some time from your busy schedule. I'm sure with everything that's going on, that's keeping you very busy as well.
Yeah, definitely. I'm glad to be here too.
Okay. Well, I guess let's get straight to the questions that we have. I'm sure the viewers are also interested in knowing your views on these things. Um, so the very first question that comes to my mind is, what are the misconceptions people have about savings in India? And why I have this question is because I talk to so many people around me, and whenever we are talking about savings, the only things that they can talk about is how much money they have saved in their bank account, or maybe in FDs. And then everybody is so very scared about any other investment options. And I don't know, when you talk savings in India, people think LIC.
I agree with you. I agree with you. In fact, for that matter, I was a banker in the beginning of my career. I'll just tell you a little briefing about myself. My name is Brij Gujral, as you told, Brij Bala. And I started my career with Deutsche Bank in 1996. Having worked with the banking industry with different banks for about 14 years, it's been almost 4 years now when I am working as an active trader in the market.
Mm-hmm.
So I agree with you to some extent. There are a lot of myths and there are a lot of misconceptions which people are holding. They are not aware what exactly the investment propositions are available in India, or for that matter in the world. Sitting in India now, you can even do the investments outside India as well. For that matter, in the first job of my career when I was a banker myself,
Mm-hmm.
there was this LIC agent used to come to my dad, like it happens with everybody. So
Yes.
he did my one or two or three policies where I've been just paying the premium for next 10 years.
Yeah.
And the moment I started learning banking and I started evaluating, I realized that what kind of return that LIC policy gives me. So once the avenues are open, only then you know. For a common man, that's going to be the thing. That's actually has been the thing since so many years now, that savings account, maximum fixed deposit. I think all our grandparents, even our parents, till our parents generation, I should say, they've been only looking forward for the return on the interest, which is the fixed deposit interest,
Mm-hmm.
which is through LIC or through banks or through NBFCs. And then there was this real estate FDs, which people have been investing. But now everybody has seen the scenario of NBFCs, how their monies have been screwed in all these organizations. So
Mm-hmm.
people used to feel government banks are safe. Then suddenly they realize, oh, only your FD amount 1 lakh is saved in every bank. Then people used to feel private banks are not safe. But then since all the banks come under the regulation under RBI, so all the banks in India are safe except the cooperative small banks. So,
Mm-hmm.
but people have this myth: only Sarkari bank, only government bank, PSUs, or ज़्यादातर लोगों ने LIC.
Mm-hmm.
That's how it used to be.
So
So I
you
agree.
spoke about only 1 lakh being safe in FDs. I think that is
Right.
being revised to 5 lakhs now.
5 lakhs, but that's still under suggestion mode. It has not been approved yet.
Mm-hmm.
That recommendation has been, I have also read that thing, but
Mm-hmm.
that's still not been approved that each individual investor is saved for 5 lakhs. Till
So
now, it is 1 lakh.
what would you say about what is the real misconception about savings that people have? Why do people only think this way?
See, I think it's a lack of education because nobody has taught them. Since childhood, we don't tell them. Even once they start earning, they don't know that they need to save. See, the new generation, let's talk about our generation, Harpreet. Our parents'
Mm-hmm.
generation was different. They were earning good on the fixed deposit amount. So they were happy. At least the fixed deposit return was beating the inflation part. But now what is happening? The rupee power is decreasing every day. So the buying power of the person is decreasing every day. मेरे college time च 5 रुपए दी Pepsi होंदी सी, now it is for 15 rupees.
Yes.
So that's the difference we have. So if we have that difference in the price value of any commodity which we need in day-to-day basis, so we need to look for the place where we save our money. At least we beat the inflation.
So
if today please.
No, you can continue. Complete your sentence.
Yeah. So if today I say I will keep my savings in the bank only, let's say in the savings bank account I'm earning 3% or maximum 5% per annum, and then I say I can put my money into fixed deposit. The maximum fixed deposit interest at the moment is 6.50%.
Yeah, 6.4. Yes.
Yeah, 6.4, 6.5. So maximum to the senior citizen it is 6.75 or 70.
Yes.
That's the maximum we can see. So that doesn't even beat the inflation. So in a way, if I'm keeping my saving in the bank, I'm actually reducing my funds, not increasing them.
Very true. Very true.
So
And
only the fact
with all this advertisement going on, mutual fund sahi hai, and all those other options opening up, and you talked about NBFCs, even Paytm and Airtel and all of these are coming up with FDs who are offering higher rate of interest than normal.
True,
So
true.
why is it that people are still stuck on the other methods that we've spoken about, the bank accounts and everything?
Actually, I think it's more of a fixed interest they are looking at, because Airtel says this much interest fixed. Any NBFC for that matter, they say India Bulls, or I don't want to name anyone, all the NBFCs. If they offer you a particular fixed deposit on a fixed rate, let's say 9%, 10%, so people actually are keen just to have that fixed rate of interest. Although in mutual fund, if you look at the scenario over a period of, if we say mutual fund is only a long-term investment. Yes, you can start with as little as 1,000 rupees a month. One, people are not aware about certain things. See, for a normal person, maximum class we have is the salaried class in India. Businessman anyways invest in business and they multiply the money. So the salaried class, I don't think 1,000 rupees or 2,000 rupees or 5,000 rupees or 10,000 rupees per month is a very difficult amount to save. But only the difference is that it's a long-term investment. You can't have the return overnight. So one is the lack of education. Second is that, safety factor which you have in your mind, that you are getting the fixed return. You are not even looking at it whether your principal is safe or not. Just because you've been assured that you will get this return, is that guaranteed? No, it is not. Even from the banks, it's not guaranteed when we know, if we go deep inside.
Okay. Well, so what would you say are the instruments that a common man should be looking at apart from FD as an investment option? What are the instruments, all the instruments, any which are available to the common man? Not that, I mean, you are an investor yourself and then
Right.
but not everybody has that kind of exposure or the time to take out from their schedule and then study up everything that's needed to make the right decision. So what are such instruments which which a common man can look into?
See, mutual fund, I must say, mutual fund is the one thing which a fund manager, which is an expert in the market, is managing for you. So they are always sitting in the market and they can handle your funds better. Plus, you can start as little as I told you, 1,000 rupees a month. So the best form of entering into mutual fund is SIPs, which is systematically investment plan. You can choose an amount which you save every month and let it go for longer period. Not like people will say 3 years, 5 years. I'll say at least 7, 8 years, 10 years. Don't expect the return overnight in mutual fund. But if we look at the statistics, over a period of 7 to 8 years, you're always positive and you get a return of between 15 to 18%.
So if we talk about today, I mean, if I had invested in a mutual fund 7 years ago, probably my money's worth wouldn't even be what I had invested in. I mean, because of the Corona situation.
See, at the
it would have
moment,
tanked.
short term, I agree. Sorry, I agree. Preet, at the moment, yes, your portfolio might be low, down, maybe you have lost all the appreciation what you've got in last 3 years probably. But when we look at over a period of time, we will not look at the mutual fund on a per se or a particular year. See, there have been times when it's not that the market correction is happening for the first time. Yes, it is that this kind of drastic depreciation never happens, or this kind of drastic correction never happens. But it's not that it is the first time. If we see, if I give you a little statistics, I was just going through on the Bloomberg Quint today morning. It says in 2008 we had 66% of correction. So do you think people lost money in mutual fund in 1 year? No. That's what I'm saying. It's a long-term investment. So it's about 7-8 years you need to keep investing and look at the return. So that's what is all about. Also, you should keep investing in stocks directly and only stick to the large capital funds, not, I mean, only the big names which you know that we are not going to burst overnight.
ITC and Tatas and Infosys and Airtels of the world. So we've talked about the instruments which are available to the common man as mutual fund and stocks, the large cap stocks.
Yes.
Are those the only two safe options for a common man to blindly go ahead and invest in?
Not really, not really. They need to go to an investment advisor for it. One. Second, they can start through their bank. They can start through anyone. Actually, there are so many people available in the market. Plus, they can keep a track. It's so easy now. The mechanism is so easy that you just download an application. Even on Money Control, it's available. On Dalal Street, it's available. In lot of applications, even on NSE site, BSE site, it's available. You just have to upload your portfolio and you can track it down. It's not that blindly you just put in your money. So you do need to keep a tab, occasionally keep on checking when you know you have a horizon of about 7-8 years, 10 years, but at least review your portfolio in 2 years time, maybe not very frequently since it's a long-term investment. And in case a person is very actively involved in stocks, which these days people do, if we like when we say Gujratis, they even पान वाला आप देखोगे कि उसके पास भी करोड़ों रुपए के stocks पड़े होते हैं. So the उनका क्या रहता है कि the moment their child is born, they start buying stocks for that child. So they educate their kids also to invest into stocks.
So maybe
that's how they multiply money.
That's something everybody else has to start doing as well.
But just keep a tap on your investment. It's not that you just blindly trust anyone. Just keep on. Now there are mechanisms available. Mobile app is such a convenient thing now. On the mobile, you just have to put a click and see what is the value.
Is there an app that you personally recommend? Like you just said, Money Control, and then I was also looking at another one, ET Money, and so are these really safe? Isn't there any risk of data loss or information loss?
See, most of these apps are safe, and anyways, they talk at the back end with the NSC data only. So there is nothing like they are manipulating anything or they are manufacturing anything. You've already invested, so you just update your this thing.
So what have they got to benefit from? Because I saw my father was going through his Paytm app, and he stumbled upon the investments section on Paytm, and then there was this option, put in 500, and this, and he put in 500 in two places. I mean, he didn't know what he was doing. He just did it accidentally, and and then he ended up buying 500 rupees worth of mutual funds from maybe HDFC and DSP. So and he got 500 rupees worth of that. I mean, there was no money that was deducted by Paytm for that transaction. So what did Paytm get out of it?
Right. See, it's the trail money, which in fact, even I am an investor like that. Like Paytm is one of the modes you can even invest through me. I have a software called OFA. That's also a mobile app. You just have to click and you can see this is the amount you've invested. This is the amount as on date. You want to redeem. You want to invest further. You want to start something. So these are actually day-to-day routine applications available to the user. If you don't need any hassle to fill up
so
the
these
forms,
are all
etc.
direct, no regular plans. That was a direct plan. I mean, there was no agent code, nothing. Direct investment.
No, that's all hidden. They don't see once that thing has been already activated on their application, it means the background checks and everything has already been through by they can't just float anything in the market. There are such rigid regulations now from
Mm-hmm.
SEBI, from MFI, which manages the mutual fund. So it's not that any investor can just start taking money.
Okay.
So the
All right.
background checks had already been done for these firms. And anyways, it's not only Paytm, not only does the investment. If you see online, how many payments do we do through Paytm now, even to our
Yes.
grocery, even to our milkman. So it's all
Mm.
safe
Okay.
that
But
way.
we've been talking about how mutual funds are an instrument for a common man. But are there any mutual funds which also fail, which also tank over time, do not give good returns? I mean, there must be good funds and there must be bad funds.
Definitely. So there are, if we really want to elaborate, there are multiple kind of mutual funds available. To start with, let's just say equity and debt. So
Mm-hmm.
equity is obviously, as the equity says, it goes into all stock market.
Mm-hmm.
And even that, there are further different categories. Let's say large cap funds, mid cap funds, small cap funds. So obviously, if a person or an investor is not much aware and is risk adverse, which an investment advisor actually evaluates when we sit with the client. So if a
Mm-hmm.
client is actually risk adverse, I can't put his money into a small cap fund, which is way more aggressive as compared to my client's this thing. And even the online tools are available just to know. Sometimes what happens, if today I feel I am probably a very aggressive investor, but then once I go through the questionnaire and
Mm-hmm.
which is available in most of these sites, you can evaluate yourself also,
Okay.
or through an investment advisor.
Mm-hmm.
So it is unlikely. Sometimes it happens that, you feel you are very aggressive in your approach, but then once you fill up all these questionnaire, you do everything, and then you realize, no, you're not. You are actually a moderate investor. You are not a
Mm-hmm.
very aggressive investor, or let's say you're a very less risk taking guy rather than
Mm-hmm.
going very aggressive in the market. So all these tools do help an individual to understand. And these days I've seen people are very interested in knowing the things online. Everything is available on the net, so you can evaluate. There are so many government regulatory sites available.
Mm-hmm.
So
So
I
for our viewers, maybe for their initial evaluation, once they've seen this webinar, maybe they would want to take a look at such a questionnaire. It would be great if you could share a link. We could add it in the
sure,
description, and then they could go to that link and see, fill that questionnaire for themselves, and kind of relate to what we are talking about.
sure, we'll do
Yeah.
that.
So I'm sure that the common man is not really unaware of mutual funds, and
Yes,
they
I
know
agree.
that they can yield them higher returns on their
Right,
investments, but still
right.
they somehow get pushed away from them. They are not really comfortable. What is this? Um, what is it that's stopping them from using mutual funds as their investment planning instrument?
I think it's more of a, they are not aware exactly how to start. One,
Okay.
yes, there are you will keep on getting flash from your bank that why to get in touch with. Uh, Click on this link, you will get the education. Sometimes I think it's lack of time, and it's
Hmm.
more of, I feel, in the next generation, there is a lack of saving habits, which I feel is there. If you, I still remember in our parents' time, and even when I started earning, probably I'm almost 45 now. So we were told that your first salary, you need to take out some amount for charity, some amount for elders, and then some amount you must save. So
Hmm.
now what is happening? The moment the youth starts working,
Hmm.
I have seen they, rather than putting in the, they do the expenditure, and then whatever the balance amount is left, they try and save or put in somewhere, or they are too busy in their jobs that they don't even have time to look at their banking accounts, how much amount is lying and where they need to invest it. One
Hmm.
is the lack of education, and second is the zeal to, save and earn, because they are not aware how the inflation rate is increasing, and how they are actually, by keeping their funds in savings account, they are losing their money rather than earning better
Very true.
on the savings. Yeah.
While we were also discussing why people are not really opening up to mutual funds, there has been another thing that's going on since the since the pension went away, NPS. So,
Mm-hmm.
what are your views on that? I mean, when we are talking about instruments which are available to the common man, NPS is being floated in our faces by the government and by the banks and by everybody right now. Is it really a good option to for people to consider?
Agreed. But when we say, you should not put all your eggs in one basket. So I feel you should have mutual fund, you should have NPS, you should have demat account wherein you should invest in stocks. I am not against fixed deposit. You should have some amount in fixed deposit and savings too, which is your urgent money. Only
Okay.
the long-term savings you should keep in your mutual funds or stocks.
Okay. So you
Yeah.
basically feel that funds and stocks should be the primary investment instrument.
Long-term prospective savings. Yes, definitely. Definitely.
Okay. I keep reading on the internet that there should be some amount one should have in terms of physical gold or in terms of sovereign gold bonds as well. So how about that? Is that also something people should consider? Because when I got married, I purchased gold at probably 14,000 for 10
Right.
grams. That was the rate at the time.
Right.
And today it's
Right.
crossed 40.
So how many years back?
I got married in 2008. So yeah,
So it's almost 12 years,
12 years now.
right?
Yeah.
Yeah. So if you have a time horizon of that much, then of course gold is also a good choice. But do
Hmm.
you think now gold will see that kind of appreciation the way we have seen in past?
I did
What is
not
your
think
view?
it would see this kind of appreciation when I was getting married. So
Okay. Okay. Right. Right. No,
unfortunately,
definitely gold
market
is
correction
also
doesn't happen much to gold. The kind of market correction that happens to Sensex, such correction
right.
doesn't really happen to gold because it's always increasing. But if at any
Right.
point we think that so gold is not a viable option for everybody, is that what you're trying to say?
That's what it is. That's what it is. Plus, I think you can't if today you go and want to buy gold, you have to shell 40,000 rupees for 1 gram. That
For 10
whatever
grams, yes.
one, yeah, for 10 grams, right?
Uh-huh.
So not that everyone has that one time of saving. You just save it 40,000 and then you just go and buy 10 grams, right?
Hmm.
So here we are talking about an individual who can save on day-to-day basis. So
Okay.
every month, if you can see, I used to tell my clients, it's such a simple mathematics. If you're
Hmm.
going out for dinner, let's say 4 people are going out for dinner,
Hmm.
and you tend to spend about 2,000 rupees over a dinner for a normal dinner, any restaurant you pick up in Chandigarh or any
Hmm.
place, let's say,
Hmm.
minimum 2,000 rupees. So you just have to plan your savings. Consider you're not doing 2 dinners for your family this month,
Hmm.
which is 4,000, 5,000 rupees. I don't think that's very difficult to for any person to save. Yes, gold is, of course, there are a number of other investment options also available, Gurpreet, if we talk about. Let's
Hmm.
say, first of all, before even you start your investment, I would
Hmm.
like to advise a person you should have your health cover first. You should have a health insurance. Then you should have a life cover, which is your
Hmm.
life insurance for your family. Then, in case you have a home loan or any other loan running, have that also insured. So there are now ways and means you can even insure all your debts so that your family doesn't suffer. If the earning member is not there, the family doesn't suffer. So there are a number of mechanisms available. But
So
when
when
we
we're
talk
talking
about a
about
common
life,
man,
but when we're talking about life insurance, is that LIC kind of
not
plans or term insurance?
see, there are two ways to insure yourself. There are people who prefer doing investments through insurance. Even in mutual fund, you can do the investment. You can have a life cover as well as investment. But as an investment advisor, I generally keep both the things separately. So you can have a life cover from number of insurance houses are available now. Let's say Tata AI, Kotak. Everybody has their insurance companies. Most of the banks have now.
Hmm.
HDFC Life. So you're just looking at their settlement ratio basically, which is how many claims do people they get and how much is the settlement they are paying to the people, how fair they are to the public.
Hmm.
That's what the settlement ratio does. So looking at the settlement ratio of a particular firm and looking at their costing, you can choose a term plan for your, which is a pure life cover for your this thing. And second is the health plan, which I feel health insurance and life insurance is a must for everybody.
So
And then
before
you start
anybody
saving.
starts investing, that those are the two things
Yes,
that one should first have covered. But I've
definitely.
read in so many places that insurances and investments, they can't go hand in hand. They are separate. You cannot combine an investment with an insurance. Those plans have to be separate if you actually have to be an investor.
See, to some extent, I disagree to this fact. Yes, even my personal choice is that I would like to give a person a term plan separately, which is generally a very minimal amount and a huge cover you get. Like by paying maybe 10, 15,000 rupees a year, you get a cover of 1 crore. Okay,
Yeah.
it depends on your income, how much cover you can, avail. So that
Hmm.
is one. Second is, it's not that you can't, if you want to take a life cover and you want to do the investment through insurance as well, that mechanism is also available. Only the thing is, people start looking at the returns in that, they want overnight the return to see, or 1 year, 2 year. No, insurance doesn't work that way. In most of the insurances, when you choose through investments, it has to be minimum time horizon of 8 to 10 years. So when you look at 8 to 10 years, because in the initial years, the mortality charges is very high,
So I had
although
an
it is restricted.
I
Yeah.
had this policy with LIC, Jeevan Saral,
Mm-hmm.
and after 10
Mm-hmm.
years of investing
Mm-hmm.
into it, the
Mm-hmm.
total, I mean, apart from the insurance cover, the total return it
Mm-hmm.
gave was about, I think, 6.5%. So that,
It must be, but that's again an assured insurance policy, not a market linked insurance policy.
no,
Am I
not a
right?
market link. Yeah.
Yeah, that's what I'm saying. So
So
that's what
it's
I
not
was
really
telling you.
giving inflation either.
I agree, but it's giving you a life cover, and by default, people have been going to LIC. Everybody, that's what we just talked about. Even I, in my initial years, and I've paid that for 10 years. And now,
Yeah.
obviously, I have a different cover from Tata AI one and then Aviva second. So,
Hmm.
now since I am aware about these things, then I can pick and choose. But what happens to a common man? They still go to LIC. And if I elaborate, in most of the assured plans, it's not only the LIC has the assured plans, even the other insurance policy which are available in the market, they also have assured as well as market linked plans. So, but when
Hmm.
we take the assured plan, I agree, they actually don't beat the inflation. But then people again have that mindset that we have an assured return.
Hmm.
This much amount I'm paying, this much amount I'll get in 5 years or 10 years. They never look at the fact that this is the amount you're investing, this is the amount you're getting, what is the percentage of return you're getting per annum.
Hmm.
So that's how the most of the policies work. You tell me which policy shows this is the return you're getting every year. None.
None. So
Yeah,
given that starting so to save early is important, and that this education, the kind of thought processes every adult reaches at some point of their earning life. So after 10
right,
years, I mean, you realized it after 10 years, and I realized after 10 years that, okay, this is probably not the right thing to do. And,
right.
and isn't it important to imbibe such values in our children from a young age, and how that can really be done?
Definitely. Definitely. I'll give you an example. I have a son who's in plus one now. And when he was in class fourth, obviously, you know how the education is now in India. It is so expensive. So
Yes.
when he was in class fourth, he demanded that I am going on a school trip and I need a camera of Sony, which was at that time costing me about 24,000 rupees.
Hmm.
So I've been in a habit of giving him a pocket money, showing him this is your pocket money, I'm putting it in this account. So he had an account from a very early age wherein every month the money was going. So this is the pocket money which I was saving for him by telling him this is the amount. So he
Hmm.
said, and some amount obviously he must be spending on going for movie, this, that. And I used to tell him, this is another way we can tell them when we are eating out. So he used
Hmm.
to choose. I said, okay, the pizza is done for this week. You've already spent 1,200 bucks on a pizza night. So
Hmm.
now the budget is over for pizza. So then you need to reschedule, maybe choose a smaller option wherein every week you go for a movie, you spend only 500 bucks rather than spending 1,200 rupees. So this
Hmm.
is another way we can tell them. So I was telling you the camera thing. So then I told him, okay, you get this much amount every month, which is 4,000 rupees for eating out in the whole month, wherein we as a family used to plan our outings. So I said, okay, let's add 2,000 rupees more. And this 2,000 goes towards the kitty to your camera. So
Hmm.
rather than picking up a camera on loan and paying 24,000 rupees and later on doing the EMI of 2,000 rupees per month,
Hmm.
it's better that you save 2,000 rupees per month, 12 into 24,000 rupees in a year. So
Hmm.
that's how he purchased his first camera. So that's
Hmm.
how we can teach the kids early saving, regular saving, compounding of saving.
Okay, so you're saying that it really comes down to the parents to be able to do it, and really there can't be another system where it can be imbibed into their education in some way?
There can be. See, now I think there are a lot of different kind of classes in schools. In our time, it was not there. Now, even from the school time, they have. I only remember we used to only have an ethic education kind of a thing in our model schools. I'm a model school product. And then now, in most of the private sector or even the government sector schools, they do have classes which give them a career propositions discussion as early as from 6th, 7th class.
Okay.
So then if they can pick and choose the career, they know what are the kind of incomes they can have there. So then
Hmm.
similarly, they have certain speakers which are coming regularly and talking to them. Like
Okay.
I go to this college regularly and just to inculcate a little bit about investments to the students. Now, even teachers are aware, principals are aware, they do invite these speakers to, talk about
Okay.
investments and
So
other
which
options
which
available.
which school or college are you visiting to make people
I go
aware
to
of it?
Gyan Jyoti College in Mohali.
Okay. Okay. All right.
Yeah,
That's a very good initiative.
yeah,
Um, so again, I'm circling back to what you do, and how is it that you are managing all that money. So I introduced you saying that you were doing investments in futures and options, and
right,
you've been
right,
talking about stocks and mutual funds. So give us a little
right.
bit of peek into how your day goes like, and how is it that you take decisions. What is it
Okay.
really that goes on?
Okay. It'll be okay. I'll try and give you a little brief how I do it. One, early in the morning, you need to actually educate yourself about the world markets because I'm an early sleeper and early riser. So I get up around 3 o'clock, and then after finishing about my an hour's meditation, whatever, then I spend about an hour and a half to have all the information about the world markets. How are they doing? What do we expect in India today? Normal, GK related to your stock market and otherwise your
Hmm.
GK about the world and India. What is going to, because in India, it's more of our market runs more on sentiments rather than just on the logistics. So we need to have an update on everything like that. And then I start my day about 4 to 9. I'm on my screen and the market starts at 9:15.
Hmm.
And from 9:15 to 3:30, it's more of a managing the stocks for my clients and myself. And I actually don't do the normal stocks, which is like buying or selling and in the cash market. I purely work in the F&O market, wherein there are different approaches to the future and options which are available. We write the positions in future and options, which is the premiums available. I don't know whether the normal is it right to speak in the first forum wherein the people are not much aware, only the people
I
who
was about to
know
ask
the,
you to
yeah,
first explain
yeah.
what futures are.
Okay. Okay, let me try my best to put it in a layman's language. So we
Okay.
have a cash market wherein you can buy and sell a stock
Hmm.
as little as one stock buying and one stock selling. Okay, you can have a
And
demat account,
and
you
from
can
what
do
I
intraday also.
and from what
Yeah,
I
yeah, please,
understand, a
please.
stock means some part of some company, some share of
Yes,
some company.
definitely. Shares. Yeah, definitely,
Yes.
definitely, definitely.
Hmm.
If we just need to go and read the basics, that's, I think, a stock, a debenture, or bond. This is available on the Google, which is very easy to understand. I'm sure everybody knows what a stock is. So
Right.
it's obviously one part of a firm, of
Hmm.
a company. Even if you're holding one share, so you are an owner of that company, that
Yeah.
kind. So that is the cash market. And when we talk about future and options is basically the market which is mainly the traders do the trading in that.
Okay.
And basically in futures, you have certain premiums available.
Hmm.
When we talk about, let's say if this State Bank of India, let's presume the rate in cash is 200 rupees. In
Hmm.
futures, the rate of State Bank of India will be about 202 rupees or 204 rupees, depending on which day are we checking the rate
Okay.
in the market.
So
So
it's a
we have
prediction of
future and
sorts. It's a
it's
prediction.
already there.
Oh, so
It's
it's
already
already.
there. Future, it's future basically. So when we let's say this 4 rupee, which is there in futures, so I can get this 4 rupee, which is a premium in future on a particular stock, will
Hmm.
turn zero on last Thursday of the month. If I how should I? Okay, there are a number of indexes available in the stock market. Let's say I mainly work in Nifty 50 index or
Okay.
Nifty 50 index stocks,
Hmm.
which is mainly we can say large cap stocks.
Okay.
Yeah.
So
So we have,
just to make sure that we are not making it too complicated, I'll just say that we should have another session entirely uh, on discussing what a future really is, because
agree. Agree.
as
It's going to be too technical, actually. I agree with you.
yes,
Yeah.
yes.
Yeah. Yeah.
So
Okay.
so we understand that what you have to do a lot of study in order to prepare yourself to work for the day. So it's like you get up
Right.
in the morning and then you study and then you go to work.
Right. And then once I'm through with my work, I start receiving my reports around 5:30 on my PC, and I still need to prepare for my next day. So I spend about 2 hours in the evening preparing for the positions which I've already taken in the market. So a brief thing which I would like to tell you, let's suppose SBI is 200 rupees today. And what I do, there are calls and there is calls and puts in futures on which basically we work, which is called options. Futures is
Mm-hmm.
the stock, a particular stock where I told you SBI is 200 rupees, and in futures SBI is 202 rupees, let's say. And
Mm-hmm.
then you also have options available in futures wherein I have calls and puts. So if I have to invest or write in SBI, let's say, I have number of options available to hedge that particular position which I'm supposed to write in the market. So mainly you will find the more people as speculators in the market who do the
Hmm.
speculation. They buy and sell, and they
Yeah.
buy and sell even in futures. But it
Okay.
is highly risky because what happens in cash market, the stock is 1, 2, 3, 4, 10 you will buy, or 100, let's say, or 1,000. But when I talk about, let's just take an example again of SBI. In future, the SBI minimum lot size will be 3,000. So if I have to buy a future, it is 3,000 into 202 rupees. So
Okay.
that's the cost.
So hence the
And
profit
what,
and
how
loss will also be multiplied by whatever.
multiply it accordingly. So it's a highly riskier option. When people say F&O में तो सिर्फ गवा देते हैं, हम तो पैसे बनाते नहीं हैं.
Right,
So
right, right.
they enter in a way where they want to just do the speculation in the market, buying and selling, which we
So
don't do.
so the
There is a
study is the
mathematical
basic
approach.
part, the main part
Yes,
of
yes.
actually getting into anything like that. So how did you come about doing this and not what I mean, you've been into banking and then you've been an investment advisor for such a long time. How did you
Right.
land into investing in futures and options?
That's a very, very interesting question, Arpit. Then I have to go back in the year 1996 when I started my career immediately after my graduation with Deutsche Bank. Deutsche Bank opened up a branch in Chandigarh, and we
Okay.
had every department available. It was a corporate banking division wherein I was part of a retail banking. And then
Okay.
we had this small 10 by 10 room wherein this guy called Ajay Rastogi used to sit. He
Okay.
used to be the treasurer, and we used to have a router screen, and he used to have about 6 7 screens along with him on that room. And
Uh-huh.
whenever I used to visit him for any work or anything, I used to always admire, one day I will sit like this on the screen and make money the way he does for
Oh,
the bank, but I will do it for myself. So
okay.
that happened. That happened,
That's
but
your
that happened
inspiration.
like after 18 years. Yeah. So I was always fascinated by stock market. I was always in touch with the stock market. I had been doing a lot of study on the stock market. I was always, since I was a banker, I never used to have time to look into any other thing or actively participate. So I was a very passive investor wherein I used to invest my money through mutual funds as well as stocks.
Okay.
So, and you wouldn't believe I never did it online because I never used to have time as a branch manager, as an investment banker. You know how private sector banks are, you never have
Hmm.
time for yourself.
Yeah.
But my banking career was also, I feel, very nurturing, and all my bosses, all my mentors have been really teaching me a lot. Especially I feel the foreign banks, they have a totally different culture where
Hmm.
you learn from every division, every person you meet, and they are
Very
very
true.
open to teach you. And now the banking scenario has changed when I started, and now, and I think there's a time every individual would like to work for himself.
Very
So
true.
that's
So
how I.
I would assume that some of our viewers might also be inspired by your story and they would want to maybe venture into this kind of study themselves. So, what was your learning curve like, and how long do you think it would take anybody to actually learn this and be able to take decisions on their own?
I think it depends from person to person, Arpit. It's purely your financial condition. So
Okay.
once I felt that I've secured my child's future expenses, then
Mm-hmm.
I decided that I can start something of my own. And also, I joined a guru.
Mm-hmm.
Is Mr. Deepak Chadda. He's also one of the trader. He's in the market since last 13, 14 years now. So
Mm-hmm.
gone are the times when there used to be brokers who were uneducated and used to
Mm-hmm.
just do these speculations. But there is a category of brokers you will see who are highly qualified, highly educated,
Mm-hmm.
and they know what they are doing, you know. And
Okay.
having worked with the corporates, yes, that gives you an edge because you learn a lot. You learn a lot. And I actually sat with him on the job as a partner with him for about 2 years. Then after 2 years, I started independent firm in the name of Gujral Associates,
Mm-hmm.
wherein I have multiple clients
Mm-hmm.
and I sit in competent. I have my own office wherein I have multiple clients. In
Mm-hmm.
I work on profit sharing basis also, and I also give them certain suggestions wherein they follow.
Mm-hmm.
That's how it is. So,
So
but
during this journey, I think it's also important to discuss if there have been any losses. I mean, you've suffered any losses, or your clients have suffered any losses, and how you could cope up with that and make sure that everything got back to normal. Has there been any such instances?
maybe certainly there is. See, future and option is a highly riskier option. So it's not that anybody would like to just invest your funds there. And the
Mm-hmm.
clients which are invested with me, they are very well aware about the market conditions and the risks involved. Only
Mm-hmm.
then they, basically I manage their trading account on their behalf. So they are well aware about the risks there. Yes, there are losses. It's not all the ones are same. Sometimes for in fact to understand that part you need to understand what exactly I do. So I think let's keep this part for the next session. Yes,
Mm-hmm.
there are ups and downs, but generally how it goes is that every Thursday of the month we have a closing.
Mm-hmm.
Like this is the last week running and we have a closing on this Thursday. So
Mm-hmm.
when and also there is a nifty closing happening every week.
Okay.
So if I work in the index, I make the money weekly
Mm-hmm.
for myself and my clients. And if I work on the particular stock, that ends on every Thursday of the month. So not all the months are alike. There are, let's say, 12 months, then 8 months will be positive or 10 months will be positive. There are 3 or 4 months which are negative. But overall, if we are positive end of the year, that's what we do.
So
I generally target about,
comparing it to the FDs of the world, you still come out
no,
on the
there is
top.
no comparison. Since the risk is higher, the return is higher. It's a
Okay.
correlation. So I target about 2 to 3% per month for my client.
Mm-hmm.
But generally, most of the stockbrokers, even the speculator ones, they take out about 1.5% per month easily. And
So
there are players like I follow Mr. Basant Maheshwari personally. I
okay.
have seen his PMS running so well, and when I was only doing the stocks, I used to only follow what all stocks he will pick up in the market. I'll also buy that, you know.
Mm-hmm.
And there are multiple other people whom I keep on reading. So it's really your personal choice per se. But then FNO is totally a different game.
So
It's not easy to understand.
from what I
Yeah.
understand, if somebody has to really invest in the long term, then mutual
Mhm.
funds is the way to go. But if somebody needs short term investment, then somebody like you would come in and then help them achieve their short term goals. Is that what you're hinting at?
Not really. You can't interpret like that. In case the person has a short money every month to save, then
Mm-hmm.
mutual fund and stocks is the one option. And of course, this is a long-term investment option. And in case
Mm-hmm.
we are adverse risk taking, then FNO is not the game for the person.
Okay.
Second is if you have lump sum amount, you have saved enough, you want to go for long term, then property and gold is another way of investing the funds.
Okay. So who is this option for? The futures and options. Who is it for? What is the size of
See,
investment one needs to get into
okay.
it?
Okay, there are, I have all kind of clients. So there are clients who say, okay, Bridge, I have this much in FD. I am getting this much amount, which is fully secured for me. So I want to play in the market. I can take risk on this much amount easily to have higher return. So there are people who give you 1 CR. They say, put my 50 lakhs in the FD or mutual fund long term, and then 50 lakhs I would like to play in the market. But then, yes, it is highly risky. but I told you the way we approach to the market is totally different. Which I gave you an example of State Bank of India. Let's say the State Bank of India is 200 rupees. So let's just an example. I will write a put under, let's say for 10 rupee put under the 200 rupees, which is 100, and then 300 rupee, which is again 10 rupee. So if I write a 20 rupee position in the market today for a month, so let's say 20 into 3000. Okay. Are you with me on that, Harpreet,
Yes,
or
yes, yes.
it's a little too technical?
No, no,
Okay.
I'm here.
So, okay. So this position which I have written, and the stock is at 200 rupees. I've written the position of 300 and 100, and stock is in between. And I've written about 60,000 rupees as premium in the market. I'm just taking an example. So this 60,000 has to go zero, provided the stock, I've done the hedging in put and call. This stock remains in my bracket. So
Okay.
this bracket we manage every day.
So that's
So
your,
we are not, yes, yes. So
okay.
we
So
try,
you
we
play
basically,
within a
that's called
cushion so that,
hedging.
okay.
Yes. So that's called hedging. So I've written 10 rupee above, 10 rupee below. So it's 20 rupees. So it's a proper hedged position I have, wherein that's how I work in FNO. So we keep on managing this position for the whole month. What if SBI crosses 300 rupees? So obviously then I'll make losses. Then I need to do certain other mechanisms. So that's the way when I come back in the evening and I work for my next day, I already know in advance if the stock goes on 300 rupees, what is my loss? So I prepare myself, what is the percentage of loss I'm ready to book this month, and what is the percentage of return I'm looking at.
Okay. So
Looking at the scenario, which changes every day.
anybody who's coming to you and is interested in the options and futures, they have to have certain loss taking capability. And
Capability, definitely, definitely,
okay.
definitely, definitely.
Okay. So from what I understand now, this is this is not your entire clientele. You said you also manage mutual funds and stocks for
Yes,
people
definitely,
which are not such a
definitely.
high investment risk options.
Right,
So,
right.
so do you think people really need to, seek help from investment advisors, or they can do that themselves? They can read up, study up on the stocks, and if that's possible, what would be the unbiased place to look into that, to learn about all
Uh,
this?
in fact, the first preference should be going to an investor. But there are people who have time in their hand and they study themselves. I've seen a lot of individuals who have done investments very successfully
Mm-hmm.
without any other person's help. It depends how active are you about
Mm-hmm.
your investments. So in case you think you don't have time, you really can't spend much time evaluating, then investment advisor is the best option. You can approach your own bank. You can get in touch with an investment banker in the bank itself, or in most of the mutual fund houses they have their own offices also available locally in most of the cities. So you can directly get in touch with them, or online options are there with every bank these days. And
So one can be
directly you should
assured
only
about,
do in case you have time for yourself, for
if
your investment. Sorry.
even if you have the time, can you be assured
Hmm.
of unbiased support from individual fund houses and banks? Because from my own personal opinion, most of the people who I meet in banks who have been termed as the investment advisors are probably promoting two or three products only at any specific time, and that too which the bank is promoting. And it really isn't unbiased advice from those people, given that they have certain targets that they need to fulfill, and I mean, their job depends on it, right? So
To some extent, Harpreet, I agree. You were saying something, or
yeah,
I can
so
continue?
my question is, unbiased, for unbiased education and advice, is there any place one could go to? I mean, eventually one might end up going to an investment advisor, but then that a little bit of knowledge before you I so let's take this example. We've just started talking today, and then you try to explain futures and options, but then since I don't have any knowledge about it, it was difficult for me to relate to that specific education.
Agreed.
So is
Right,
it
I understand.
there? I mean, Google is vast. There is so much information floating out there. How, where is
Right.
it then that one could start looking into these things? and try to make an opinion about it.
Right. Arpit, I agree with you. It's not that they want to promote only one or four products. Sometimes it's lack of time. Sometimes multiple factors. See, everywhere in every field, it's all humans. So it
Right.
really depends from human to human how they treat their clients. So saying per se, I go back, my clients are still associated with me since last so many years. So if you
Mm-hmm.
personally if you take care of your clients' money as your own money, that's the
Mm-hmm.
key. And and you're looking at a long-term career. So obviously your client, you can fool once, twice, maximum. I don't think even twice. Once is enough. So you can't fool the client for a long-term basis. In case you really wanted career in your investment proposition, in investment banking, or let's say investment advisory banking, then you can't fool the client. And these days, everything is available online, and people can go on amfi.com is one of the sites which is available, which gives all the information related to
Which,
mutual funds. That is
which is the
one.
website?
AMFI, AMFI, AMFI
EMFI.
India, A, A.
Mm-hmm.
Yeah,
AMFI.
I will put that under the link on your this thing.
All right then.
So
All right
most,
then.
yeah. So that's the best site to look at. And the basic, I feel, yes, the basic knowledge is a must for an individual before choosing anything, before
Mm-hmm.
even choosing your investment advisor. And I
Mm-hmm.
have seen most of the time the clients are more reluctant as compared to the investment advisor. Arpit, I told you a mechanism. If you have filled up a questionnaire and you
Mm-hmm.
know your result is moderate or aggressive or conservative, and your banker is advising you a small cap fund, for that
Mm-hmm.
matter, as an individual, you can also judge that
Right.
if I'm a moderate client, how come I'm going into a small company which is highly risky,
So you're saying
right?
that
So the
one should fill up a questionnaire before they even try approaching somebody for advice,
in
and
fact
see
that's
for.
the uh, in fact that's the basic responsibility of any advisor. They are supposed to evaluate first the client, what is the
Mm-hmm.
risk appetite of the client. That is
Mm-hmm.
the first thing which an advisor also asks the client. So if you don't
Right.
understand your client's goal and the risk appetite, how will you choose the instruments or products for the client, and how will you do the advisory?
Right.
That's the thing.
So,
Yeah.
as an investment advisor yourself, what do you think? I mean, maybe not yourself, but for somebody who's just starting off and who's just evaluating their options on how to go about it, what kind of costs could one be looking at? Should they want to seek advice on such matters? Is it really a big chunk out of
uh,
their money
See,
only in
initially there
advice?
used to no, initially there used to be some advisory cost, but now it's not there. And you, if you remember, you had initially asked me a question that your father had invested that amount on through Paytm online, and
Yeah.
how come there was no charges? So basically, what happens? All these fund houses,
Mm-hmm.
now the things have changed. Initially people used to just advise anything, get the upfront income from the mutual fund house. Any
Mm-hmm.
advisor could just advise anything, but now it doesn't happen that way.
Mm-hmm.
Provided the client stays invested in a particular fund, now then the advisor or the bank, in that case, the when the bank is advising, it is the advisor is the bank basically.
Mm-hmm.
So then they get the trail income only then if the client stays invested for a particular period of time.
Okay.
Earlier, this part was there, which you were mentioning, that yes, people were biased and used to give only one or two options. But now that's not the case. The client will stay invested in a particular scheme, only then the advisor will get the income. And that also very nominal income, which generally the individual investor it doesn't pinch to the investor also. It's
Mm-hmm.
that little a cost. So basically the advisor doesn't charge anything from the individual. It is the mutual fund house, the asset management companies which manage the mutual fund. They pay back to the advisor in the form of the trail income.
Okay. So is that true that is it true for both regular and direct plans?
Yeah, yeah, yeah. It's the same thing.
Okay. All right. So even if somebody is investing into a direct plan, direct growth plan for a mutual fund, but doing it through an advisor, still the advisor gets paid. But again, a good advisor doesn't really care for that much money because they have other things going on.
Yes, obviously, if you want to continue with the client in long term, and how will you fulfill the goal of the client? And client these days, individual are also very smart. It's not that any investment person will not look at is the investment. What am I choosing? I feel
Mm.
that much awareness is there now. If a
Mm-hmm.
person is going and choosing a mutual fund, basic सबको पता होता है, equity है, and then हमारे पास debt है, and then उस equity में we have a large cap, then mid cap, and then small cap. तो इतना तो I think सबको पता है आज की डेट में.
So you just mentioned about helping clients fulfill their goals. So talking about
Yeah.
goals, what kind of investment size one has to prepare for, keeping their retirement and taking care of their family in the mind while beating inflation? These are a lot of big words. Any new investor who's just starting off, it would intimidate him to even think of these things. So what plan should one follow? What is the sweet spot of hitting a specific number per se?
See, there are, if you will just Google right now also, there are calculators available wherein they do the reverse calculation. Suppose, let's say today I have a goal. My son would like to go for engineering and I would need, let's say, probably 25 lakhs in one go. So when he was only 6 years old, probably I would have chosen something. Let's say as on today, if you have a goal, let's say next 10 years to buy a Mercedes, you need about 50 lakhs, let's say.
Right.
Just presume that.
Hmm.
So 10 years is the period we are looking at, and then we are looking at about 50 lakhs. So if we do the reverse calculation, to reach 50 lakhs, there is a mechanism. You just have to put in the amount 50 lakhs. You do the backward calculation. How much amount every month do you save, presuming the return as minimum as 10% per annum? So those are the calculators mechanism which are available, tools available even for individual and even for advisors. We also take help of those tools. We also can't just calculate it on ourselves. How do we reach the goal in 10 years or 15 years or 20 years? Each individual has a different perspective and different goal for different age groups, right? Maybe you start your saving at the age of 40. Maybe somebody starts the saving at the age of maybe 23 from the first salary. So it really depends from person to person, what age bracket, but these are the tools and mechanisms which are available even for the advisor. Even I take regularly help of those reverse calculators, which they are always available. I will put that also under as a link, which is really a very helpful tool. It will also give you the picture that if you invest in mutual fund, what is the compounding mechanism, how it works, that how easily you can achieve your goal in next 10 or 15 years, provided you're saving every month religiously and regularly. Yeah.
Okay. So, keeping investments in mind, is
Yeah.
there anything one should strictly stay away from? Anything that you figured out in your time and experience that, okay, this is one thing that you should strictly stay away from, and any investor should not go close to this. I mean, this is kind of a no
I
go.
will only say don't have a blindfold. Keep at least do a little digging wherever you're investing. Not any particular investment, I will say, but I have seen the period when there was a property slum. I had few clients, at least 10% of my clients, they were very aggressively, I'm just giving you an example, they were very aggressively investing in property only. And you wouldn't believe there was this client who had his daughter's marriage and son's marriage plan in a gap of 1 year. And there was no buyer for his property. So obviously he had no liquid money. So I only want to give one advice, that have your investments bifurcated in different pockets rather than just investing complete funds in one go. Like today, the markets are down. We say that you start investing. Yes, it is an opportunity to enter into the market. People will say we are losing money, all that. It happens in the stock market. That's the part of it, that you will find correction in 5 years or 6 years, 7 years, for a particular 1 year, but that's the opportunity for most of the people to enter in the market. If today most of these stocks are on a low, I am advising my clients to start shelling, at least start putting in at least 20% of your funds, and slowly, because we further expect the market to go down, and then slowly probably you try and average. The same thing we do in SIP in mutual fund. You're averaging your rupee if you're investing every month.
Right. Right.
So basically, I would say that wherever you're investing, be vigilant. It is your money, no matter who is advising. Never have a blind trust on anyone, and don't put all your eggs in one basket. Keep your savings in separate things. I've seen people getting stuck in one particular thing, and although they have enough, but they are not being able to use that. So no point having gold or property investment so much that at a particular time when you need the money, you don't have in your hand.
Right.
So there are times I've seen people have a lot of wealth, but they were not being able to liquidate it.
Right.
So that caution I would like to give it to everybody.
Well, it has really been a wonderful session, ma'am. I really appreciate all this time that you've given. Also, since this also marks your entry into the online world of educating people on what to do, what not to do, and to introduce them to various investment horizons. I wish you all the best, yourself as well. And hopefully, we'll continue these conversations in the future and probably meet up sometime as well.
Sure, sure. Thank you. Thank you, Harpreet. Thank you so much. Thank you, viewers. Thank you. Look forward to see you all again. Thank you.
Thank you. Take care. Bye bye.